Hello, good morning, ladies and gentlemen. How are you doing today, and how well are you preparing for the new week? Sorry for the new day, please. So pleased to welcome you to yet another promising session on my morning live as we take a technical dissection of the current market structure. Well, think activities has been a little bit slow in the last 24 hours as most of the pairs that we have been monitoring since the beginning of the week appear to have transitioned into a choppy scenario where price action has been trading between a range. It looks a little bit irregular, anyways, but it has been trading within a range, and we still do not know of or have a clue into where price action will be going. And this is as a result of the macroeconomic event that we're expecting today. I told you of the GDP on at the beginning of the week, as we majority of the participants in this market will definitely be looking forward to this event. And this event is going to be coming in the next 4 hours, I guess. So we have been experiencing a choppy action in the financial market since yesterday. And you all know the importance of the GDP here. It shows the monetary value of all the goods, services, and structure produced within the US economy. And this is a gross measure of the market activities because it indicates the pace at which the US economy is either growing or decreasing. So everyone will want to be looking forward to this event to see before making a significant decision on the market. And coupled with the fact of the banking crisis lingering in the US, it's one of those things that has made the US dollar a little bit unpopular in the last couple of days. So we are going to be looking at the charts anyway from a technical standpoint so that we can anticipate this event in such a way that we can position ourselves to be able to catch any of the opportunities that finally happens prior to the event, probably a couple of hours into the event and post the event too as well. So with that being said, here I welcome you once again, and let's dive into the current market structure to decipher what our next line of action will be. So as usual, the first commodity we are going to be looking at this morning is the US oil commodity. And on the US oil, remember, since the beginning of this week, we have been buying the US oil actually. And as a result of this, we were able to scoop quite a significant amount of pips at the beginning of the week. I think we wrote with about 800 pips thereabouts on this pair. So let's quickly run through how this went by for the week for us, and then we shall be going into the details of what our expectation is going to be like for today. And if you are following me on my TradingView platform, you would have seen the update which I shared I think a couple of hours ago on that platform. And before we go into that, let's run through how this week went by. So we had a situation here where we bought at the $69.80 level at the beginning of the week when we saw price action break out of that channel we identified earlier. And it was at this point we had our first buy position for the week, and we were lucky enough to identify significant structure along the way as we added more position at breakouts of key structures like the $70.20 level, the $71 area, and as well we also saw a situation here as soon as price hit our TP target at the $73 area. Price action actually went through a consolidation phase around that area. Hold on a second, let me zoom this in a little bit so that we can see this clearly. I hope you can see my screen clearly here. So since price action hit our TP target, that was just on Monday too as well. During the later part of the New York session on Monday, we saw this consolidation phase happen around this area. And you all know what we look out for. It's quite a simple setup. All we need to do is remain patient and wait for price action to either break out or break down of the channel to give us a signal of where price action will be going. And in fact, what happened during the early hours of Tuesday prior to our morning live session was the breakout of the resistant line at the $73 level to give us a clue into the strength of the buyers in this particular market. And we rode the move all the way to the upside here, and not until yesterday during the New York session we saw how price action significantly broke down the $73.90 level to the downside, taking us out of all the buy positions we had there. Though we had some profits on that one, but it's not as significant as what we had. So we had like 70 pips on this one, and then about 30 pips, so approximately like 90 pips, 100 pips thereabout was taken out from that trade in that market. Now, with a significant breakdown of the $73.90 level here during the New York session yesterday, it was a significant signal that we might be seeing a selling opportunity at that point. And if you remember vividly during my live session yesterday, I told us all that we are going to be using this bullish trend line here as a yardstick for trading activity yesterday. And what we simply said yesterday is that if price action remains above this bullish trend line, we shall feel comfortable in that buy position. But if at any point in time there is a breach of that bullish trend line, then we want to be anticipating a momentum shift. And this was exactly what happened here. If you had missed out on the first one here, the market gave us another chance to join as we saw the retest of structure right below the $73.50 level to trigger that sell position in that point, and price action moved about 85, 85, 87 pips in our direction before this buying pressure came in. And I'm very sure you must have moved your stop loss, because I explained in my publication that we should secure our position. And one thing we always do here, I always mention here, is that whenever price action moves significantly well in our favor, we definitely want to be securing that position, because the market is fluid and we want to be as fluid as possible so that we can lock in whatever profit we have made so far, so that we don't lose out on whatever we have made if price action does the opposite at that point. So we had this situation here yesterday, which I shared on my public platform after the breakdown of that structure. And let me quickly run through that quickly. Okay, this is it right here. So I said, just as discussed during our live session, price action triggers sell stop order at the breakdown of the $73.50 level. Hence, we want to be securing this position by moving our stop loss. And one thing I told you, if you remember vividly yesterday, what I said about the current situation here, that if price action ever breaks down that trend line and the $73.50 level, then we have a bust up just right along that bullish trend line, where we need to be very careful of what will be happening around that area. And it depends on how price action reacts to the structure that will determine if we are going to be buying or adding more position to our sell trade, as it shares a significant confluence with that bullish trend line that has been supporting this bullish momentum here since the beginning of the week. So I told us all that as soon as price gets into the structure around the $72.50 level, we want to be moving our stop loss accordingly to secure the current sell position. And I hope you did that. If you had done that, you would have locked in some small profit before this bullish momentum began. And with the situation of things right now, and considering the buy pressure that just resumed above the $72.50 level during the early hours of today, I'm of the opinion that we might be going in for another wave of bullish momentum at this particular point in time. As you can see, buy pressure resumes just around that bullish trend line, which has been supporting that bullish momentum since the beginning of the week. So what this simply means is that the impulsive move that struck the bullish trend line is more or less a retracement of that previous impulse leg that started this week. So some people, some participants in this market had actually taken some profit off their first position, and they want to gather more momentum by adding more position to that existing trade here. And as a result of this, we begin to see some buy pressure resume around this area. So going into the UK and the New York session today, I'm of the opinion that we might likely be seeing another wave of bullish momentum here, and that will only happen if another significant breakout of that area here at the $74.30 level. Remember yesterday we have been seeing selling pressure around this area, so we need some breakout of that structure to give us another confirmation that buyers are still very strong in this particular market. So we shall be identifying that level too, as well as it would also be one of the key structures we shall be using to take advantage of more trading opportunities in this particular market. So let's highlight that area, and we shall be labeling it the 73 let me call it 73.35 level for the sake of this session. So 74.35 level, sorry. So we have the 74.35 level figured out here. So a further breakout of that level, taking out that buy, that sell positions around that area, will definitely be welcoming additional positions here. And for those who had actually joined right from this area, well done to you for being on standby, because I couldn't do that as it happened during the early hours of today. It was in the midnight here on this part of the world, so I missed out on that opportunity. So I shared on my public platform this morning that we want to be anticipating a buy position at the breakout of the $73.50, that is breakout retest of that structure. And this was what I shared this morning. I said buy pressure resumes as price action takes out the sell position with a small profit. Looking forward to buying opportunities. And like I said here, so this is what we are going to be looking at, and our center of focus for today is going to be around the $73.50 level. That is one case. And then another thing that will also help us to maintain a bullish bias here is this bullish trend line that has been guiding this bullish momentum since the beginning of the week. So as long as price remain above both the bullish trend line and the $73.50 level, we shall feel comfortable in our buy position. So now that we have this information figured out at this point, so let's see how price action is currently reacting to the $73.50 level on a much more lower time frame, so that we can use that to position ourselves. And for those who had missed out on this opportunity, let's see if we could have another chance to join this potential rally to the upside. So in that regard, we shall be scaling down to a much more lower time frame, like the 15 minutes time frame. And here we are on the 15 minutes time frame. So I will be zooming in a little bit here. And one thing you would notice about this current structure, following the impulsive move that came into that $72.50 level, you will notice that there is something that looks more like a reversal pattern gradually unfolding, which appears to be mature and valid at this particular point in time, and it's looking in the form of a head and shoulder pattern. As you can see, we have the left shoulder on the other hand. Hold on a second. So we have the left shoulder here, we have the head here, and we have the right shoulder here, and price action appear to have broken out of the neckline at that point to give us a signal of a confirmed reversal pattern here. So you know what we do here whenever we identify this kind of setups, we want to be having a neckline area for that structure, so that we can use it as a platform for buying opportunities. And if we identify that neckline should be falling somewhere right around the $73.20 level, which I will be labeling here for the sake of clarity. So we have the $73.20. Hold on a second, that was a typographical error. So we have the $73.20 level here, and then we have it like this. So we have a breakout of the structure already, and price action appears to have triggered a $73.50 level on our higher time frame. So there is a likelihood that price will come back, do a retest of that structure, whereby pressure resume around this area will be inciting that trend continuation to the upside. So these are things that we are going to be looking at as we continue to monitor price action from this current area. So for those who had missed out on the breakout of the $73.50 level, there is a possibility that price could still come back into the structure. And if it does come back into that area, what we want to be looking out for is buying pressure right here on our lower time frame. You can even go to as far as your 5 minutes time frame to check this out. Then we look out for another trend continuation to the upside in that regard. So this is what I will be looking forward to today. So my bias on the bullish on the US oil for today is more or less bullish. Now, if price action does not come to the $73.20 level, and instead it continues to find higher highs, it's okay. We also going to be having a buy stop order above the $73.90 level, where we are going to be looking out for buying opportunity around that area to join that trend continuation to the upside. Then we also have another structure at the $74.35 level, which I emphasized on the 1 hour time frame. So this current buy position, buy expectation in this market has a tendency of giving us multiple entries. So we want to be on standby to catch this move. So going into the New York session today, let me do a quick recap of what we shall be using here to guide our trading activity for today. So we have the $73.20 level, which was figured out here on our lower time frame. So as long as price remain above that level, and if you see what is happening here, it shares a confluence with that bullish trend line that has been supporting this bullish momentum since the beginning of this week. So let's see how price action reacts to the structure. But one thing for sure here is that as long as price remain above the $73.20 level, we shall remain positive on the buying side. So let's continue to wait and see what happens, and we look forward to more opportunities at breakouts of key structures like the $73.90 level and the $74.35 area. So that is that for buying opportunities on this one. Now, if we consider this impulsive move to the downside, like we always do here, that we always ensure that we keep tabs on the contrary if it happens. That is, if price goes the other way around, we want to also be on standby to catch that move. Now, if we take into consideration the impulsive move here that brought price into the $72.50 level, we want to see a breakdown of the $72.50 level to actually sell the US oil here. And the reason why I have said this is simply because of what has been happening in this market here and since Monday. Now, if you look at as soon as price got up right above the $73 level, we saw how sellers tried to break down the structure to the downside, but was met with strong resistance from the buyers at every point in time. And what this simply tells us is that this area is a strong demand zone, at least for this week on this market. So we need price action to break down that structure, taking out all the buy positions there to give us that leverage to actually sell the US oil for today. And if you take a closer look at the current structure from this view that I'm looking at right now, you will see that price action is looking more like a reversal pattern is forming between the $72.50 level and the $74.35 area. Now, how did I get that? Well, if you look at this impulsive move to the upside here, it looks like it's forming the left shoulder of the head and shoulder pattern. We have the head here where price struck the $74.35 level. Price action came back into the structure at the $72.50 level again. That was yesterday. And then we have the situation here where if price does not break out and instead continue to drop to the downside, we might likely see price action transition into a head and shoulder pattern. And if this happens, the $72.50 level will turn out to be the neckline of that reversal pattern, and definitely it will be a platform upon which we are going to be selling the US oil. So if a breakdown retest of the structure happens, we want to be joining a decline to the downside. So we are not selling the US oil unless price action breaks down the $72.50 level. And in that regard, I will be advising us to have a sell stop order just right below the structure, so that whenever price action breaks down this level, we want to be part of this move to the downside. So let's see how price action plays out in the next couple of hours on this commodity, and be rest assured that I will be joining you in the comment section on my TradingView platform to give you an update on what my expectations are if anything strange actually happens. But at the meantime, we remain bullish here. As long as price remain above the structure, we remain very, very bullish. But if it breaks down, then we turn our buyers into a bearish perspective. So that is that on the US oil for today. If you have questions or you need me to make further clarification to what I just discussed, feel free to drop your enquiries in the comment section. So with that being said, here I will be moving on to the next pair. Well, I will be checking the comment section to see if there are any questions for me. And so we shall be moving right into the GBPUSD. Now on the GBPUSD, we have been experiencing a choppy situation here on the GBPUSD, as you can see here since the beginning of the week. Though we have been having some buying opportunities at one point in time at the beginning of the week where we were able to make some profit, and since then we have been finding it difficult to hold on to a momentum in the last 48 to 76 hours thereabout. So the week started with a situation here where we saw price action break out the 1.22500 level, and which at that point it was we bought at that area, and since then we have been buying. Then we bought there, we added more positions at the breakout of the 1.22800 level, and we were able to make close to about, I think, 150 pips in total. Okay, close to 100 pips in total on that one before the sell momentum actually took us out of that position. Then we also had a sell stop order, we had a stop loss triggered here yesterday after price action took us out of that sell position. If you remember, we had a sell position here after we cited a breakdown of that bullish trend line, but unfortunately for us, we were taken out of that position at this point. And one thing about this current structure is that you would notice that the 1.23500 level has been giving us signs that sellers are really strong around this area, and this has been existing on this market structure since last week's trading session. And if we look at what happened throughout the course of this week, we saw that every attempt by the buyers rather, to break out of the structure has been met with strong resistance from the sellers. And we need to be very cautious around this area. Now, with the look of things right now and looking at what has been happening here in the last 48 hours, you will see how the 1.22100 level, which was supposed to be a breakdown retest for selling opportunities for us yesterday on the last 2 days now, has turned out to be a strong demand zone in this market. And as a result of this, we might likely see the breakout of the 1.23500 level significantly well today. And I shared the publication on this morning that we want to be buying, want to be having our buy stop order above the 1.235, considering the continued attempt by the buyers in this market. So buyers are really trying to break out of that structure. And so this morning I shared this update here. Hold on a second, let's run through this quickly. So I said, after being taken out of the sell positions at break even, the appearance of buying pressure here has a tendency of breaking out of the 1.23500 level for buying opportunities. So this was my update this morning. So we should be having a buy stop order above the 1.23500 level with the hopes to join this trend continuation to the upside. Now, if you can see what has been happening here in the last couple of hours right now, price action appear to have broken out of that structure, triggering our first buy position for today, as we hope that this move will continue to the upside. So with the breakout of this structure right here, where will our take profit target be? Well, I think we already projected that earlier. So one thing I will be doing here is to take into consideration this impulsive move that started from the 1.2200 level, and then there's the impulse leg here. So I want to be using my Fibonacci extension tool, run it through this impulse leg here, and then we shall be aiming at an area just between the 127.2 and the 1414 area as our TP target, and that should be falling somewhere around here. And in fact, we could extend it to the 161.800 level to have a maximum TP target around that area, which will be dovetailing to about 120 pips in profit. Hold on a second, let me extend this. Okay, so we should be looking at somewhere around the 1.24650 level with approximately 120 pips in that regard. And if the market presents us with more opportunities to add more position to this existing trade, then definitely I will be giving you an update in that regard. So whenever there is an opportunity to add more position, I will let you know in the comment section on my TradingView platform. So on this one right now, we already have a buy position triggered here, and let's hope that this move continues to the upside. And one thing about this structure here is this is the highest point price action has ever been this week, and I think it's very important that we acknowledge that structure, as it will definitely be a yardstick for us during the UK and the the UK and the New York session today. So let's acknowledge that level. Very, very important we do that, so that we can also use these as a yardstick for our trading activity for today. So we have that area situated at the, let me see, 1.23620 level. So let's quickly run that, type that out, 1.23620 level here. So please at the top right hand side of our screen. Now, one thing about this current structure is that if price action ever breaks out of that level, then we shall be thinking of adding more position to our existing trade here. But one thing I would like to state here is that we are not going to be having a buy stop order at this juncture in the market. The reason is because this area has been a strong selling niche in the past, and we might likely see sellers coming again since it has a memory for selling power. So what we shall be looking out for to buy at that particular point is to see price action do a significant breakout of that structure. If it does break out of that structure, then we are okay here and fine that the bullish momentum is going to be happening during the later part of the week. Then one thing we are going to be doing to join this trade is to wait for price action to retest structure, or it could retrace back into this level. Then if it does retraces back down, then we could have our buy stop order above the 1.23620 level to be able to be part of the trend continuation to the upside. I hope you get this simple explanation here. So please be mindful, we are not getting too excited at the breakout of that structure. We are not having a buy stop order right now. We want to see a significant breakout happen first of all. Then if it happens, we scale down to our lower time frame, look out for price action retracing back into structure. Then if it does retrace back into structure, we look out for buying opportunities. We look out for buying pressure. Then we have our buy stop order above the 1.23620 level. Then we could actually join that trend continuation to the upside from that area. So it's quite a simple setup we have here. I have a typographical error here. So it's 1.23620 instead. So let me readjust that. 1.23620, right? Okay, so this is what we shall be looking out for here. So our stop loss on this position should be falling somewhere around the 1.23200 level here, which will be dovetailing to about 25 pips. If you can afford that, let's have about 25 pips here as our stop loss for this current buy position that we have here. So that is what we are looking forward to here. We remain bullish here, and if anything contrary happens, be rest assured that I will be giving you an update in the comment section on my TradingView platform. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair here, and the next pair we shall be looking at this morning is the XAUUSD. And in fact, for the last 48 hours on the XAUUSD, we have been witnessing a very, very choppy situation here, which might look a little bit annoying sometimes. But one thing we need to be doing here is just to remain very patient for price action to evolve into something that is very tradable for us at this point in time. Let me quickly run through how we started the week here. So at the beginning of the week, we sold the XAUUSD actually, and we've been profitable on this pair so far this week, as we sold at the breakdown of the 1,970. Remember, we had a channel here between the 1,980, which happened to be the highest point price action has ever been this week, and then we saw the support line here at the 1,970. And you all know definitely what we look out for whenever we have this kind of channel. We want to see price action either break out of the channel to the upside or break down the channel to the downside for a trading opportunity. And with our stop orders placed at both ends, normally we have our stop order at the resistance line and the support line, waiting for either of the structures to be broken to be having a position triggered. So we had a sell stop triggered below the 1,970 here right on Monday, and in fact we saw how the dollar had a huge traction as price moved over 250 pips in our favor before this bullish momentum began right on that same day. And on Tuesday here, we identified the potential situation where price could actually turn out to evolve into a reversal pattern here. Remember, we identified this double bottom structure here That was on Tuesday, right? We identified this double bottom structure where we had the neckline of that reversal pattern just right around the 1,964 level. And I also emphasize how that area also shares a beautiful confluence with our bearish trend line, which has been supporting this bearish momentum to the downside since the beginning of the week. And one thing I told us all on Tuesday was that if price action ever breaks out of that neckline at the 1,964, which also shares a confluence with that bearish trend line, it will be a beautiful sign that the trend line may no longer have the capacity to continue to hold that bearish momentum. And this was exactly what happened during the New York session on Tuesday, as we saw price action break out that structure and in fact gave us about 100 pips thereabout, I guess. Let me see. Okay, about 120 pips before this bearish momentum started in this market. And one thing you would have noticed here in the last 48 hours in this market is the fact that price has come back into that neckline area, and since then we have been witnessing a consolidation phase around that area. So if we take into consideration what has been happening here in the last 48 hours, is looking a little bit more bullish in this particular market, as you can see that price is finding it difficult to break down that zone between the 1,964 and the 1,960 area. So look at what we have here. We have a demand zone around this area, so we shall be acknowledging that area between the 1,964 and the 1,960 as a demand zone for this particular current market structure. So what we are going to be doing here is to be expecting a bullish momentum at this point. And if I extend the 1,970 level further to the future here, you will see that that area has been a selling niche in the last 24 hours, where we have been seeing attempt by the buyers to actually do a breakout of that structure. It even happened here a couple of hours ago. We saw how price action has been making an attempt, knocking through that roof to break out of that structure. And you all know that when this continues and the knocking continues over time, the ceiling gets weaker and weaker and weaker, and finally it will get broken at one point in time. So I'm of the opinion that we might likely be seeing a breakout of the 1,970, considering the strong demand zone that we have between the 1,964 and the 1,960. So for today now, the 1,970 level will be serving as a key level for our trading activity. And if you had watched my XAUUSD publication for the week, which I explain how we are going to be planning for this week on the gold, you would realize how important I said the 1,970 level is when we looked at it from an holistic point of view. So if you want to see how we got to that point, I would advise you to watch that video so that you can have a better understanding of what I'm really talking about here. I don't want you to just jump into my trades here or my ideas here, but you need to see how important these levels are to be able to feel confident ever thinking of taking this trade. So the 1,970 was actually our key level for the week, and it was the support line for the week too as well here before we saw the breakdown happen, which gave us the first sell position for the week and our first profit on the XAUUSD this week. And now this area has now become another significant structure here where we need to be very, very careful at this particular point in time. So for me personally, I will be suggesting that we have a buy stop order just right above the 1,970 with a stop loss right below the 1,964, which will be dovetailing to about, let me see how many pips is that, about 75 pips. You can place that 75 pips at this particular point in time to see how to see if this bullish momentum, the breakout of the 1,970, will turn out to be valid. And if it so happens that price action does something like this, breakout, and we start seeing buy pressure resume above the 1,970, this will be a beautiful signal of a trend continuation to the upside. And we also have structures. This current structure has a tendency of giving us multiple entry. As you would remember, this is the highest point price action has ever been this week. That is the 1,980. A further breakout of that structure definitely will be giving us additional position to add to our existing buy position on the XAUUSD. So for today on the XAUUSD, I will be holding on to a bullish bias here, considering the consistent and persistent buy pressure that has been rejecting all attempts by the sellers to break down that level. So for me at this point, we shall be looking out for buying opportunity in this market for today. Now, to make things a little bit easy for us to be able to identify and feel comfortable in that position, we shall be identifying a trend line here. So we shall bring out our line chart at this point, connect the series of lower highs since Tuesday's trading session, and we shall be using this as our yardstick for trading activity for today. So this is what we are going to be using to guide our trading activity. So what this simply does is that it makes us feel comfortable in whatever positions we are. So if we are buying the XAUUSD at the breakout of the 1,970, if price action remains above that trend line, we shall feel comfortable in our buy position, and it also helps us to place our stop loss in the right area. So in this kind of situation here, you want to have your stop loss just right below the bearish trend line to secure the current buy position if it gets triggered at this point. So this is what we are looking at today. So we already saw the breakout of the trend line here, so we await the breakout of the 1,970 to join this bullish momentum to the upside. Now, like we always do, if the contrary happens, that is, if price action does not break out that structure and instead price action continue to find lower lows here, definitely we want to be part of this move to the downside. And if that is going to be the case here, I would want us to see price action break down the 1,960 for a trading opportunity in this market. And why have I said this? Well, I shared this earlier. I told us how this area has been a strong demand zone in the last 48 hours. You can see between the 1,964 and the 1,960, we have been seeing buy pressure resume from that area, negating all attempt by the sellers to break out of that structure. So if this continues and we see a situation here where price drops to the downside, taking out all the buy position by breaking through the 1,960 at any point in time today, then we want to be seeing this as a bearish signal. And remember, we are not getting too excited here, as it could turn out to be a false breakdown where price could climb back up to the upside to incite a bullish momentum. So we need to be very, very careful at this point. So as soon as price breaks down that structure, what we want to be doing next is to scale down to our much lower time frame. It could be your 10 minutes, 5 minutes or 15 minutes time frame, and look out for structures like rejection or retest of the structure that was broken. It could be the retest of the 1,960, or it could go as far as retesting the bearish trend line, which also shares a beautiful confluence with the 1,964. And one thing we want to be seeing after the retest is selling pressure right below the structures on our lower time frame to be able to give us that confirmation to join that bearish momentum to the downside. So you can get this very, very clearly. It's a very simple setup we have here, as we need a breakdown of the 1,960 to be part of a sell position in this particular market. So unless price action breaks down the 1,960, we are not going to be selling the XAUUSD for today, and we are waiting for buy positions above the 1,970. And I've told us all that we want to be placing our buy stop order just right above that structure so that we can catch that move. So that is that on the XAUUSD, but be rest assured that I will be jumping in the comment section as usual to give you an update on my expectations on whatever position that evolves here. So that is that on the XAUUSD. So I will be moving on to the last pair for today, which is the USDJPY. And on the USDJPY, we have been quite profitable on this pair since the beginning of the week, as we were able to be part of a buy opportunity in this market, and we were lucky enough to ride this move all the way to the upside, having about how many positions here? 1, 2, 3 positions running in this particular market. So this was how it started for us this week on the USDJPY. As we saw, this was where we saw some consolidation phase happen here. We saw some buying opportunity initially, then price action came back into the structure with this engulfing bearish candles. Then we started seeing something like a reversal pattern where sellers found it difficult to break down the 131.550 level, and it appears the dollar is gradually gaining momentum against the Japanese yen as the Japan economy approaches the end of their fiscal year, and that is coming up tomorrow, and we can see the traction against the yen happening here. So look at when we saw this here on what was that, on Tuesday? Is it on Tuesday or Wednesday? I think on Tuesday we saw this. I think I shared this on my public platform. Let's hold on a second and run through that quickly. So the USDJPY, where is it? So we have the USDJPY. Let it load up.
Hello. Good evening.
All right, so we have the USDJPY here, and let's run through Tuesday. Okay, so here we are on Tuesday. So this is the setup we identified here on Tuesday on the 30-minute outlook. We had a bullish trend line. We had the 131.00 level. Remember how important that level is on the daily time frame. Please watch my video on the USDJPY to see how important that structure is. The 131 level has been a very strong demand zone in the last 10 to 11 months in this market, and I told us all on Tuesday that if price action remains above that 131.00 level, we shall be looking out for buying opportunity, as this area has a strong memory for buying power. Then we saw the situation where price dropped to the downside, taking us out of our position. We still have a buy stop order above the 131.00 level here. Like I said here on the 28th of March, that was a couple of days ago, I told us all we are going to be buying at the breakout of the 131.00 level. And as you can see here, we had our buy stop triggered, and since then price action has been climbing, finding higher highs in this market. I also told us here that we shall be having a buy stop order above the 131.700 level as well. So we had two positions running here, as at yesterday's trading session, morning live session, we saw the second position triggered here, and I also updated here that we shall be looking forward to another breakout of the 132.100. And look at what we had here. We had a significant breakout of that structure as price action continued to the upside. So I told us all to secure all the three positions running in profit. So as of this morning, we had all our buy position taken out with about 300 pips in profit as selling pressure resumes just right below the 132.750. So with the situation we had here, so we have about 300 pips already made on the USDJPY for this week, and going into the New York and the UK session today, how do we intend to trade the USDJPY? Well, for me at this particular point in time, I would require us to remain very patient at this point in time, as if you consider the bullish momentum that started here on Tuesday, you will see that the current structure here, a retracement phase, is long overdue. As you can see, this huge momentum. How many pips move is that? That's like a 230 pips move to the upside, and I'm of the opinion that a retracement phase is long overdue at this particular point in time, as we might likely see some profit taking activities happen prior to the GDP, where we could see something like a retracement back into structure, into our golden zone area, before another wave of bullish momentum will happen, or probably break down that structure to the downside. So what I will be doing here is this: we shall be extending this bullish trend line, which was supporting this bullish momentum since Friday's trading session last week. We can see when we connect a series of higher lows here, we have a bullish trend line to emphasize the strength of the buyers in this particular market. So what I will be doing right now is to extend this bullish trend line a little further into the future, as we expect that price could probably retrace back into the structure in anticipation of another wave of bullish momentum to the upside. So this is one of the scenarios that I will be looking forward to today. So I will be extending the 131.700 level, which as you can see shares a confluence with that bullish trend line. And if you look at what happened here yesterday early morning, we saw the breakout of the 131.700, and from a technical standpoint, whenever we have a breakout of structure like this, we expect that price will come back to do a retest of that structure in anticipation of another wave of bullish momentum. So these are things that we are going to be looking at for today. So I'm of the opinion that price is currently going through a retracement phase here, and we might likely see price drop to the downside. And for those of us who are counter trend traders or scalpers, you might want to take advantage of this counter trend opportunity. And if you had actually been part of this trade already, right below the 132.750, well done to you for being on standby. But I will be advising you to move your stop loss to lock in some profit at this point, as we could still have a bullish momentum trigger from this area. So if you are thinking of selling at this point, if you are a counter trend trader, but if you are not a counter trend trader, I would advise you to stay clear out of this and wait for price action to mature before the second wave of the bullish momentum is taken advantage of. But if you are a counter trend trader at this point, let's see how we can take advantage of this retracement to the downside. So in order to do this, we want to scale down to a much more lower time frame, let's say the 30 minutes time frame in this case. Then we bring out our line chart. Then we connect the support line that is here, which falls just right around the 132.320 level, I guess. Okay, so we have the 132.320. So I'll be making this a more darker color, 132.320. First of all, let me label this one out and make it a little bit smaller than the previous figures here. So I'm giving it a darker color. Let's give it a green, and I'll give this a darker green here. And I would like to place this. Okay, I think it's okay like this. So now we have this situation here. So if we are going to be selling this one right here, I want to see price action drop below the 132.320. Not only drop below that structure, but look out for retest of structure. That is signs that sellers are present in this market. Then you could join that decline to the downside back into that bullish trend line, or the 131.700, which will be dovetailing to a minimum of 70 pips around this area. So if you can afford to take that move, then you want to join that move right around that area. But if you are not a counter trend trader, as soon as price breaks down the 132.320, just take a break, go and take some coffee or go and sleep, take a nap, and then come back and see what happens when price action gets into the structure, as we want to be seeing some buy pressure around this area to join that trend continuation to the upside. So that is that for taking a counter trend opportunity here. And I told us all we are waiting for buying opportunity just right above the structure to join that trend continuation to the upside. Now, to further guide this counter trend opportunity, if we take advantage of that move, well, we will have a bearish trend line already here if we connect the series of lower highs here. So I will be giving this a lighter trend line. So this will be guiding this bearish momentum to the downside. So if price action continues to trade below that structure, we feel comfortable in that counter trend. And one thing about counter trend trades is that you definitely want to be moving your stop loss accordingly as price action breaks significant structures. Move your stop loss accordingly, as you rather move all the way to the downside. But if price action breaches that trend line, that is breaks out of that trend line, we might be getting ready for a trend continuation. So we are looking for buy pressure resume above the structure after the breakout retest. Then we want to be joining, or you wait for price action to do a breakout of the 132.750, then you could join that bullish momentum. So if a breakout of the 132.750 happens in this market, we are going to be joining that trend continuation. So to join a trend continuation here, we want to see price action break out both the bearish trend line and the 132.750 in this particular market. So that is what we are going to be looking out for today on the USDJPY. I hope I was able to make myself very, very clear here, and I'm very sure we are well equipped at this point in time to be able to take advantage of any trading opportunity that finally comes in during the New York and the UK session today. And it's on this note I want to be calling it a day here. Thank you very much for your attention, and I look forward to seeing you right in the comment section as usual as we get prepared and continue to monitor this price action. So I'll see you again in the comment section, and I look forward to seeing you same time tomorrow, 8 a.m. 8:05 UTC in the morning, as we get prepared for another morning live session and the last trading day of the week. So do have a wonderful day, everyone. Best of luck. See you in the comment section as we get prepared for the UK and the New York session. Bye bye.